Have you ever wondered how decentralized finance was going to actually disrupt traditional finance? Well, I think there's going to be an integration, and that's what we're going to talk about in today's video. All right, so just a few weeks ago, Ripple put out a guide for institutions to adopt DeFi or decentralized finance. And it's basically a merging of the traditional markets, stocks, bonds, equities, all those things that people are used to trading in a Web 2 format are now going to be tokenized and issued as real world assets. But there's some prerequisites, right? And that's really what Ripple's doing. They're laying the groundwork using the XRPL and the amendments there to make sure that all of these traditional institutions have all the things that they need in place for compliance and all the boring stuff, right? We talk about all these sexy things with AMMs and liquidity pools, ways to stake your assets or restaking. There's lots of crazy stuff out there. But if you want the traditional institutions to ever be able to provide any of this stuff and be able to advise people on it, which is what we do at Digital Wealth Partners, we provide actual advisory on digital assets. The traditional institutions are going to need a couple things in place. They're going to need KYC, AML, accreditation, identity. They're going to need the ability for all those price feeds of that stuff to be able to port on chain and make sure that those are reported real time. They're going to need custody, which has been a big piece of Ripple's mission over the last couple of years. They acquired Medico, and now they're the back end for some of them, large institutions globally, including Zodia and Archax and other people that are being innovative, providing, digital assets alongside traditional securities. And you have to have all these licenses. You need to be a broker dealer. You have to have an ATS. There's just a lot of things that are safeguards and need to be in place for people to be able to participate in markets, but really haven't made their way into institutions from the Web3 world. And so that's what they've tried to set up on the XRPL. And the first one of those was digital identity, and that's been passed here just recently. XLS 40 was that amendment. And basically, it allows people to prove who they are without needing a middleman like a bank. So you go out and you get KYC'd, AML'd, and you have this digital identity. You can share a hash with the counterparty. They only get to see the information that they need to see in order to be able to support you or provide you access to whatever you're trying to get into. So if you are accredited, you can, that's actually coming up soon. It'll be the credentials and permissions domains that's been proposed on the network. And that'll be in addition to the digital identity amendment that's been passed. So right now, you just got normal information, background check, KYC, AML. And again, these are third-party providers that are going through this information. You're going to have to disclose it, and they'll issue that digital identity on chain that's proof that you are who you say you are without them having to go check it every single time. I don't know if you've, tried to log in or create an account on, let's say you wanted to go do Webull or Robinhood or any of these other brokers, right? Every time you create an account on there, you have to go through the same process. You have to go through the background check. They got to do KYC, AML, OFAC, BIL. Now you'll just be able to log in with your credential and your digital identity, and voila. They already have access to what they need. They know that you're good to go. You're not a terrorist, and you can participate on their platform. And that's the beauty of what this is going to allow. Now, the other things I talked about were custody. Again, that's not anything that you can natively do on the XRPL. These have to be providers, institutions, trust banks that are willing to hold crypto. And we got a big move this last week from the OCC, and they are now allowing banks to basically freely operate with digital assets, which is huge here for the US. And I think that's going to move the ball forward significantly on that field. The other thing that Ripple put out in the roadmap that I don't think gets enough attention is price oracles. So in order for stocks to be tokenized, FX market, commodities, basically any of these traditional markets that a lot of people want to see DeFi applications built on top of, you're going to have some type of mechanism or price feed that pushes that data on chain where it's readable inside those smart contracts. And that's what oracles do. So they're already interoperable with Band Protocol and DAI. But I think that there's going to be more that come along. Obviously, Chainlink announced their partnership as well. And so this is huge. Like this is a requirement And I'm really glad that they got this in place because this opens the door for the next couple amendments that are coming down the pike here to really take hold. And I think we could actually see the tokenization of the stock market in the very near future, potentially even on the XRPL. Um, and, I have thoughts about Project Ion and Corda, but I think that publicly traded equities and secondary markets are always going to be on a public network. And that makes the most sense for me. The primary issuance, let's say, a company files an S1 and their stock needs to be moved into a private environment before it can port it onto a public chain. Maybe that's where the Corda component comes in, or it's just a back-end settlement between counterparties that trust one another, the clearinghouses and the brokers, for instant settlement there. But I digress. So have to have the oracles in place before you can do any of the tokenization of this stuff. And we've got that. So the few things that are coming up on the roadmap that I'm super excited about, because like I said, I think it's going to lead to the tokenization of FX market, commodities, stocks, all those things this year on the XRPL. You got credentials and permissions. And so a lot of times in order to participate in private investments in particular, you're going to have an accredited status. So in your digital identity, when you are going through that process, you would provide whatever credentials needed. So if you have over $1 million outside your primary residence that's liquid, or you made more than 200,000 if you're single, 300,000 if you're married for the last 2 years, then you would qualify as accredited here in the U.S. And that's very different across the world depending on where you live. You could qualify as a sophisticated investor in the U.K. or accredited in some other jurisdictions, depending on just there's things outside your net worth that hopefully we'll start to look at here in the U.S. in the near future. With credentials and permissions, you'll be able to participate, in certain environments. Some things will be restricted for certain people. And when you're working with financial institutions, they need safeguards and guide rails, and they need to be able to exclude certain parties from certain transactions or the capability to even participate in certain markets because they are not qualified, right? And I know, again, there's not always the right or wrong things when it comes to that. And I think that those things will improve with the new SEC chair coming in as Paul moves in here in April. But until then, we still have to have all that stuff. And I think that that'll persist into the future. And same thing for like broker dealers. If you are a broker dealer, then you should be able to participate in a certain market. And if you don't have a broker dealer's license or you don't have the ATS, the things that are required to do certain things, then you probably shouldn't be doing those activities. And so if everything's on chain and you have to have these credentials in order to be able to participate or even access stuff, it kind of does the regulator's job. I don't know that we would need an SEC over the long term if the guide rails are programmed in and you really can't mess things up, right? So we'll see if that continues, especially if it all moves on chain and it's transparent and like immutable and auditable very easily, like fraud would be easily detected. So the last thing on the roadmap, which I thought was really interesting, is a multi-purpose token, or an MPT. And this isn't something that I've heard of before, but it's been proposed on the XRPL. And it's similar to an NFT, so a non-fungible token. But a non-fungible token represents something that's non-fungible. It can't be exchanged one for one for, anything else. So like, as an example, like a $5 bill would be fungible with 5 $1 bills, right? It's the same tender. It would be the same denomination. It would be worth the same, and they are fungible. You could do one or the other. Where an NFT is basically a single representation of value, like an artwork, right? There's just one of a kind, or just one of that piece of memorabilia, whatever it is. That's where I think those will be used. But for these multi-purpose tokens, they can still be fractionalized, but they're fungible. So it provides some of the benefits that you would normally get from an NFT, but for a fungible application, which I think is incredible for stocks. If you think about stocks right now, there's stock splits, right? So Amazon gets up to, I think it got up for like $4,000, and they did a 20-to-1 and it brought it back down to $200. So it's affordable for the average person. But if you had fractionalized stocks, then that's not a problem. You would be able to purchase 1,000th of a stock or 100th of a stock. Berkshire Hathaway, is worth uh, $500 million per share, and a lot of people would love to own one of those, but they can't because they can't even afford to purchase one. So if they had, a fractionalized version of that, you could buy, let's say, a millionth of a share over there for 50 cents. You could buy some Berkshire Hathaway and get some exposure to that. And so I think it's just going to really open doors for a lot of investors. And I think that this is actually what this is going to facilitate with this multi-purpose token is you'll be able to issue tokenized securities on the XRPL and then fractionalize those. And they'll be traded real time. They'll be accounted for. And it'll be a really unique mechanism that I haven't seen on any other networks. That's kind of the roadmap that they've laid out. They've already got a lot of things in place, like we talked about. They've got digital identity, custody is already in place. They've already got the price oracles. Now they just need these credentials to pass, so that, if you're accredited or qualified, or, you have certain criteria that you meet that allows you to participate in certain markets or areas, then you will be able to do that. And then next up with the multi-purpose token, that's going to allow for the fractionalization of these, RWAs that are issued on the XRPL, and open doors that I don't think a lot of people even understand yet for access for retail and for new investors that normally wouldn't look at this asset class or traditional assets even. It's only 10% of people that even own stocks. So I'm excited to see Ripple putting this forward and really getting out in front of this and pushing things along for the integration of decentralized finance and traditional finance. If you got value in this video, please give it a like, subscribe, check out the other videos on the channel, and we will see you on the next one.